Is the stock market crash over, or is there more pain to come? After recording a YouTube short video yesterday and publishing it, I realized there's a lot more here in this market today that we need to talk about. I can't just gloss over it in 1 minute. So I'm producing this video so we can dig into the details a little bit more and find out what's going on. So this past Thursday, we had what I think is a clear stock market capitulation. And what does capitulation mean? It's, well, basically when investors throw in the towel, they just give up, they sell everything. And when the CPI announcement came out hot Thursday morning at 8:30, you can see exactly what happened. That's exactly what happened. The market went straight down in a huge way here. And then after the market opened, it turned around and ended up very, very positive. This to me is a capitulation. Throw in the towel, everybody dives in as a feeding frenzy and buys it up. All right. So, and the other piece that you want when you have a capitulation is high volume. And you can see that here. You can see if you look at this volume here versus the other days, this one is much higher. And of course, the volume was also a little bit higher on Friday when the market sold off again. But I think more importantly, if you look at this trend from here down to here, clearly down. But then if you look from this bottom, where did we close on Friday and even in the after hours? We're still higher. So I think this is a good sign for the markets, at least for the short term. So let's see what happens here. So what are we seeing in our bottom indicators? Well, we had a very strong bottom indication here, back here in September. The bottom forming indicator was at 100%. This is extremely strong. And the confidence level was at 98%. Again, extremely strong. And you can see as the confidence level started to drop off while the bottom forming indicator stayed at 100%, we started to see the bottom confirmation come up, meaning that, in fact, stocks were going up. That has to happen to have a confirmation. You have to get past the bottom to confirm that it happened. But you can see we didn't get a bottom confirmation. This never got up above 90%, even though the confidence level was very high. Now, what's happening more recently in the last couple of days is we've got another bottom forming indication here. This is shooting up toward 100%. But look at what the confidence level has done. It's dropped down here to about 76%. This typically happens right at or near the bottom before things turn around and start to go up. Now, it doesn't mean they're going to go up forever here. We might just get a short rally and then come back down again. But this is encouraging that maybe we'll see some positive price action this coming week. Hopefully I won't end up with egg on my face. This is another really good view and a way to look at the markets and how healthy they are. So I keep this August 17th date in here because this was a healthy stock market. You can see small caps, the NASDAQ, tech-heavy NASDAQ, ranked 1 and 2. The riskiest ETFs ranked 1 and 2. And then you've got SPY, which is a little more risky, and the Dow Jones Industrial Average, which is the, quote, safest equity ETF, coming in at number 4. So highest risk up here, lowest risk down here. And in fact, here's all the safety components down here at the bottom. This is a very healthy stock market. And then on September 30th, we had exactly the opposite. Cash, treasury bills, and gold ranked 1, 2, and 3. So safety up here at the top, equities down here at the bottom. Although it was interesting because small caps were above the Dow and SPY. So I found that a little bit interesting. But now here we are on this past Friday, October 14th. And what do we have? Well, we still have cash and T-bills ranked number 1 and 2, but you'll see the equity components are starting to float up here from the bottom. The safety stocks in the Dow are ranked number 3. No surprise there. People are putting money into the markets, but they're saying, I'm not willing to take risk on small caps and tech yet. Although small caps are ranked above SPY. But you can see these equity components now are floating up out of the muck and starting to improve. So this is really encouraging, even though we had a big down day on Friday. How about the S&P 500 buying and selling pressure? Well, if you've seen these graphs before, the orange line is the selling pressure, and the gray line is the buying pressure, and the black line is the price of SPY, the ETF for the S&P 500. And you can see that it's been on a long downward trend here, but since the end of September, it's been kind of going sideways. You can also see that the selling pressure has been declining as of late, and the buying pressure has a slight increase to it. So this is looking positive. I like what I see so far, but like I said, we'll have to wait till next week and see how things go. What about the Treasury market? Well, let's take a look at intermediate Treasuries here. Again, everything's been dropping here, so it looks just like the S&P 500. Very long price decline here, and now going sideways. Selling pressure in decline overall, even though it's above the buying pressure. And the buying pressure has been increasing. It's on an increasing trend. So this looks encouraging. Hopefully, Treasuries have bottomed out for some period of time now. Depends. If the Fed keeps raising interest rates, Treasuries could drop even more. So what about gold? We had a very hot CPI number on Thursday morning at 8:30. And gold is typically an inflation hedge. So you would think if the markets viewed inflation as a big problem, gold would be rallying. In fact, it tried to do that back here, but you can see it's been falling since the beginning of October. And in fact, the selling pressure has moved way above the buying pressure. This is telling me the markets don't buy the inflation story. I don't buy it either, by the way. What about Bitcoin? Now, cryptocurrencies, in my mind, are a risk asset. They're not gold. They're not anything else but a risk asset at this point. That may change in the future, but you can see that crypto has been acting just like equities and treasuries, dropping here and sort of flat here with the selling pressure above the buying pressure. So where does all of this leave us? Well, I agree with Cathie Wood. I think the Fed is overdoing it big time. They're looking at the wrong indicators. I agree with her. Deflation is going to become more the issue than inflation. And we're just going to have to let this play out to see what happens. But based on everything I see, it looks like the markets could rally this coming week. There's no guarantee, but let's see what happens and let's see where it goes. I'm Calvin Rose, and thank you for watching today. If you like this video, please hit the like, subscribe, and notification bell so you won't miss an upcoming episode of Invest Smarter. That's all for now. Hey, thank you for watching. If you enjoy these videos, there's several ways on Patreon for you to support the channel and access exclusive content, including special posts on the markets, educational materials about how to select investments and manage your portfolio. And at the investor level, you'll have full access to our natural selection stock rankings so you can evaluate individual stocks or market sectors that fit your investment style. Check out the link at the pinned comments below, and thank you for your support.